Welcome back, everybody. Here we go. We're starting to see the reaction from the Fed report coming out. The algos have gotten a hold of it already. Here we go. The report comes out at 2. So we're seeing a little bit of selling right now on the SPY, but typically the first move is an overreaction, and it's not even like sometimes it doesn't even pick that direction. Like we could just see the SPY start to rip. AMC was doing very solid. Now the SPY's freaking out a little bit. Let me see if I can actually get the report and go through it. I think I've got it right here. Let me look. I'm trying to refresh this page to see. Federal Reserve issues FOMC statement. Here we go. I'm literally looking for a couple of numbers here. How are we doing, people? We doing all right? Whew, all righty. SPY is freaking out a little bit. Let's see what happens. I mean, again, we're going to have to wait until Powell speaks, but things are selling off. Ryan, don't want to hear it. Holy SPY candle. Yeah, how big is it? Yeah, $2. Yeah, that's a big one. That's a big SPY candle right there. All right, here we go. All right, Federal Reserve. Full range of tool. Yeah. Whatever. What are the numbers? Oh, I'm getting the notices right now. Hold on, I can just look. Increase its treasury securities by at least. Will decide to reduce the monthly pace of its net asset purchases by 20 billion and 10 billion. Okay, so they went with 30 billion. That's fine. That's what the market was expecting. What about rate hikes? I don't see anything on rate hikes. Okay, so they went with the 30 billion. So let's see what 10 Fed officials see 3 rate hikes in 2022, 5 see 2 increases in 2022. Yeah, but what's the number until 2024? Fed doubles the pace of taper to 30 billion a month. That's exactly what the market was pricing in. Federal Reserve to keep Fed funds rate unchanged, so no rate hike. So it's 3 hikes in 2022, 3 in 2023. So that's 6. So it literally just came in according to expectations. 2 and 5-year yields rising. Yep, that's going to cause the market to sell off a little bit. Fed officials see inflation at 5.3% at the end of 2021, 2.6% for 2022, 2.3% for 2023. That's bullish, guys. The market's going to come back right now. So this initial reaction off of that's literally exactly at the market expectation. So look, everything is starting to pop back up now. So that's exactly what we were expecting. Rates to remain unchanged. Yep. Also, for all you guys coming in right now, make sure you guys are dropping some likes on the stream. We're going to go over. Okay. So remember earlier when we were, AMC's ripping right now. Here we go. The SPY should start to come back up too. We should finish the day green off of that. Because when you think about what was priced in over the last couple of weeks, that's exactly what the market was pricing in. I mean, honestly, it looks like they're doing. I'm not sure if it's through the end of 2024 or all the way up to 2024, like through 2024 and like at the end of 2025. So if they do 3 in 2022, 3 in 2023, and then 3 in 2024, that's 9. That's exactly what everybody was expecting. So let's see what happens here. The SPY is coming back. Remember, if you guys saw my tweet a couple of minutes ago, the initial move of the SPY is going to be aggressive and volatile, but it may not be exactly what direction the market's going to pick. That's exactly what we're seeing right now. SPY is coming back up now. It is about 20. Oh, it's going. There she goes. All right. Watch Amy start to get going here. This could get good, people. This could get good. Here it goes. SPY just went green for a second. Amy is looking like she wants to get jumpy. I want that push of 25 on Amy. DocuQ's ripping. How's Pfizer doing? Because I did just buy some Pfizer calls. Not going to lie. Pfizer tanking. Fine, I got a lot of time on this. All right, DocuQ's ripping. Ryan, that's what we need, my man. All right, Amy at 24.20. We have the SPY doing its thing up here. I mean, let's see what happens. We're going to get Powell at 2:30. We're going to get a lot of comments on inflation, taper, and rate hikes, but everything just came in within market expectations, like right at market expectations from that article we looked at yesterday. So there we go. My SPY call is printing. There you go, Thomas. Smash that like, says Eric. Thank you, my man. Prog bouncing too. All meme stocks are booming. Yeah, guys. Santa rally. It's coming. Here we go. SPY is, I mean, Are we gonna hit an all-time high by the end of the year? I think so. I mean, everything was just exactly what we expected. Here comes Amy. Oh, she's getting ready to go. She's 20 cents off of going green for the day. Docu going. Let's see. How's Pfizer still? They getting a little action here? Not really. Coming right down to VWAP. Actually, they did make a statement on. Hold on. With the progress on vaccinations and strong policy report, indicators of economic activity and employment have continued to strengthen. That sounds like exactly what Powell's about to say. The sectors most adversely affected by the pandemic have improved in recent months, but continue to be affected by the disease. Job gains have been solid. Unemployment rate has declined substantially. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation, or just you bought everything and now, SPY is having a time right now. That's a $2 move with dailies. That's big. Let's get GME is probably well above 150 now. 150.18, doing good. Oh, look at this, people. The bullishness is back in the market. Here we go. Can we see 24.50? I think we're going to. I mean, we're going to have to wait to see what Powell has to say. Like, he could always just say something stupid like he did. Honestly, if you think about it, the fact that Powell already told us that he was going to increase the taper at that meeting like 2 weeks ago was like the most brilliant thing ever, because he just priced it in. The market was like, oh, okay, we know this is exactly what's about to happen, and we're just going to price it into everything in the market. So now it's all of the bearish catalysts that we've been talking about for a while, debt ceiling, the new variant, Evergrande, all that type of stuff is it's kind of done now. So like, we've got 2 weeks left in the year. Let it rip, huh? Let everything go. So SPY is coming down a little bit here. I mean, the report was good. Let's see. How's everybody feeling? We doing good, people? Methinks insiders heard good news. Yeah, they did. They did. Get your shoes ready. We're going running. We could. I'm going to shoot TMI the link. I think right now he wanted to come on, so I will shoot him the link. We got about 23 minutes until Powell comes on. So let's see. Hold on. Where is he at? All right. Let's see what else we got for the news. Fed instructs adjust open market purchases of the treasuries to $40 billion on a month. Yeah, we know this. This is not. Futures implied traders see 74% chance of Fed hike in April, 100% chance in May after the Fed statement. But we knew that was already going to get priced in. Like, we knew that if they speed up the taper's done, then they can hike up rates. So stocks and crypto having a nice run. I think it's going to continue like until the end of the year. We might get some bullishness out of all of this. I mean, Docu coming back down, SPY's chilling out a little bit, but it's still at the high, still green on the day. What's the high low on it literally just made a new day low and then a new day high in 1, 2, 3, 4, 5, 6, 7 minutes. The day low, 460.75. The high, 464.75. So it's a volatile move, but it's not anything we haven't seen before. All I heard is money printer go burr. Actually, the opposite. They're kind of turning off the money printer. That's like what the tapering and rate hikes is. It's them processing, turning off the money printer. I believe most shorts were covered to write off the loss. Couldn't imagine all the shorts hold past the time to write off the loss. Couldn't imagine it being smart to hold past write off time. I would have to agree with that. But the problem is they just really went for it on shorting this week. I've got a really good video for you guys tonight. We've got a lot of cool stuff to go over. It has to do with one of these data metrics right here. And there are a couple of funds that couldn't handle the heat of the kitchen. Shout out to Keenan. So we've got estimated short interest right now on Amy at 20.72%. That's solid. That is getting up there. Hit the like button, people. Yeah, for all you guys coming in right now, it would mean a lot if you guys could just drop a like on the stream. Just helps out with YouTube algorithm, gets more people in here. So thank you to all of you guys who have already done it and who are going to. It helps out a whole lot. You guys have been super supportive of the channel recently. Thank you. Love watching your videos after market closes. Eddie, thank you, man. I appreciate it. What did the Fed say? The Fed, okay, the most basic thing that we can say is that everything that came out in this FOMC report is within market expectations. It's at what the market was pricing in. So when you think about the market, it was expecting like potentially really bad news to come out. Like if they were going to increase the taper by more than 30 billion or expect more than the amount of rate hikes they did. So 3 in 2022, 3 in 2023, and potentially 3 in 2024. Well, that's what the market was expecting. So Amy popping back up here. 24, 23 right now. It's getting a little jumpy. It's down 1% right now. But the SPY is starting to make its way back up here ahead of Jerome Powell's statements. Very good sign. GME at 148.27. Looking good, people. Yeah, 20.72% estimated short interest. Why is the utilization so low? It is low right now for what we've seen in the past out of like what we've seen on the estimated short interest. But I mean, I'm still expecting it to get above 80, 85 by the end of this week, especially with like yesterday and today. All right, SPY's flagging a little bit here. Let's see if it wants to come up or if it's just going to hang out for the rest of the day. And this is going to be like a dud of a Fed meeting. Please mute when cough. I didn't cough yet. Just bought another 100 AMC shares, says Kevin. Attaboy, Kevin. IWM. I mean, they're probably running up too. Small caps are probably really getting a nice pop. Yeah, look at this move on IWM. I mean, the day low is way back here at 211, but the high's at 215. Like, that's big. SPY pop. Here we go. Bring Pico back. We're ripping. Let's roast him. I mean, we're still red on the day. GME, I mean, is green. So if Pico is here, he'd be pretty happy. So we don't want him here. Would it really matter? Good or bad news, they will still short AMC and GME. It does matter because it's going to be a lot harder. Like, let's say remember, the whole reason why we were getting shorted into oblivion over the last couple of weeks is because of all of those just random, stupid, bearish catalysts. New variant, they were hammering it. We saw inflation, market was selling off. They were hammering it. We knew that there was going to be volatility up until this Fed meeting, but now that it's over, we have the info. We still have to wait for Jerome to speak because he can always say wild stuff. But other than that, it's like, I mean, what else is there that's going to hold us back going into the end of the year? AMC ape about 12 minutes ago. TSM and Apple did a good bounce. Yeah. What up, folks? What's up, Sue? How you doing? They're pulling out every trick. I mean, right now, not really. We're getting up there. So I think we're going to finish green on the day on a lot of things. The SPY honestly could have a 1%. It'll probably have at least a 0.5% green day with the way that it's moving right now and in a reaction move to the Fed meeting. Are you going to stream it? Yeah, of course I am. Yeah, I've got it up already right here. You guys want to hear the music real quick? That's the Fed music right now. This is the Fed music. I don't know if you can hear it, but that's what the Fed is right now. They're not doing anything. Pump up the VIX. I mean, the VIX is probably tanking right now. Like really, IWM is getting really jumpy. Amy looking like it wants to have some fun. 24.32 right now. I'm still looking for that break of 25. The SPY is getting nutty. That SPY strangle would have been dirty if I took it, but I was like, I'm gonna wait. How's Pfizer doing? Swear if Pfizer's the only thing selling off. Thank you. That's what I thought. Docu. Here we go. It might be call season. All right, let's see. I'm still red on these Pfizer contracts. I could have bought calls on literally anything else. Sold my UVIXI a few seconds early. There you go. VIX up 6.35. No, it's not. Well, I could just look at VIX probably, can I? On this thing. It'll give me a weird. It'll just do this. Yeah, the VIX tanked. I mean, it's up a little bit, but it just tanked. Hold on. Why does it do this? I hate Webull. I hate them. They're complete dummies. Docu. I click one thing that it doesn't like and it shifts around my whole screen. No, I want it right there and it doesn't do it ever. All right. SPY looking for that 0.5% green day right now. Amy only down 13 cents right now. So looking like it could get a little jumpy here at these levels. Seriously, this buy has done $5 more in 10 minutes? Yeah, $5 move in 10. Yeah, that's a big move. That's why these Fed meetings can be fun because you can just hit like, hold on, let's look at the premiums on this buy. I mean, the calls in general, like, I think these were like really cheap, but the bids on it's not coming up. So I don't know. I mean, if you had some SPY calls around here, and it ripped here on a daily, you're crushing it. So if you guys got in there, good for you. I mean, it would have been very, very painful on this red candle, but like I said in the tweet, like the original direction that it picks is not the direction that it always takes. It's just a reaction. It's just like, oh, Fed meeting, and then it just tanks or it rips, and then it just picks it what it's gonna do, like it just did. So SPY coming down a little bit here. Amy still doing solid. Check PTPI. Don't mind if I do. It's coming up a little bit, like with everything else in the market. I mean, what's the Ortex on it? We can do that. Let's see. 36%. I mean, that's dirty. And the cost to borrow, dirty. Like, this thing is shorted into oblivion right now. Like on the way in. Apes, thanks, the OREV. Let's see. My 470 strikes went up 100% in 2 minutes. I mean, if they're for today, I think you know what to do with those. Because it is Wednesday. Like, this is a daily expiration day. M. Kriegs, what's going on? Read my question above in chat. Maddie B's TV, what's up? To get the AMC NFT, do I have to wait for December 31st, or do you get it as soon as you join Investor Connect? I think you have to go to the movie, and you get it there. Surprise, a nothing burger. M. Kriegs, I mean, it's not enough. I mean, this is a big move. Like, I mean, this is what we were kind of expecting for the Fed meeting. Like, I was expecting 30 billion in 9 rate hikes. Just what the market was pricing in. Like, they all know what the market's pricing in. They talk, they're like, yeah, this is what we're expecting. This is probably what the best thing is. If they were to say they were going to 25 billion instead of 30 billion, we would have exploded right here to 468, like really ripped. But I mean, that's still a big move, like a $3-ish move in the SPY in this amount of time. It's pretty big. I mean, if you timed the calls down here, you made probably 400% at least. But I mean, other than that, I mean, we've kind of got clear skies ahead. So that's very, very solid. Ho, STV called it, was all priced in. Thank you. I mean, M. Kriegs was on the same page too. What's up, Mass Gang? How are we doing, people? I did send TMI the link. So hopefully he wants to pop in and watch Jerome Powell speak. We are going to be watching it over here. Amy popping back up. Let's see if she can go green. She's down about 26 cents on the day right now with the SPY getting a little jumpy again, which is always something that we like to see. One question. Can't your government force the hedge funds to cover? Not really. Mass Gang, what's up, people? How are we doing? Just feel like they strike fear beforehand on information we knew was coming. Exactly. Like, if you know how to read and like, not if you know how to read, but like if you know how to like sort of interpret like what the Fed needs to do and what they've done in the past, they're not going to, especially with the particular economic climate right now, they're not going to do something that's going to tank everything. Rhode Island, what's going on? Thank you guys for the supers. Hey fam, here to spread lots of germs and good vibes. Hope we're all doing amazing today. Shout out the mods. LFG Amy, thank you, Rhode Island. Mighty, thank you so much for the super. Just a small thank you and a sub. Thank you. I appreciate that. Guess some little D's are tapping out. No, this is not a short cover move at all. This is market rips on a Fed announcement. We're going to go over. I've got some stuff for you guys tonight that I think you're going to enjoy. It's pretty cool. We got some funds collapsing. We've got some really interesting data points that I want to share with everybody. And we also have to, I mean, we'll talk a little bit about the Fed meeting, but it was all priced in. If you know how to read, yeah, that came out wrong. If like want to force the hedgies to cover, keep buying and holding. We are winning. There you go, Diana. SV, congratulations on getting your car insurance in handle. I did not actually do that. Yo, STV, morning from Palmer, Alaska. It would be morning over there, I think. Sushi was good. There you go. All right, people, let's have some fun today. Ooh, DocuSign getting a little jumpy here. SPY coming down. I want Amy to go on an absolute moon mission by the end of the day. That's what I want. Your hair looks nice today. Jazz Cabbage. Thank you, my man. Appreciate it. All righty. Did you reference the hedge fund I mentioned earlier during the AM stream? Lex, was it Anchorage or whatever it was? What because I saw that pop up on Twitter today. That was pretty sweet. Let's see. We got TMI in here yet? No, I sent him the link though. All right, people, let's have some fun this morning. I mean, this afternoon. It's afternoon for me. I was supposed to write a little bit of an essay, or I was planning on writing some of my essay during the break time, but I was like, screw that. I don't want to write an essay right now. I want to focus on what Jerome has to say. SPY, the original meme stock. Sell the rumor, buy the news. It's pretty much what happened. That's pretty much exactly what happened. Market spiking a little, so now they can sell or short when Powell starts speaking. Easy money. I don't know about that. If you want music, I can play the Fed music for you right now, and you're going to hate yourself. So we're not going to do that. Yeah, also, for all you people coming in, if you guys don't mind, just dropping some likes on the stream. Just helps get some more people in here. Helps out with the algorithm. Thank you guys so much. Let's see. Amy, 24 right now, down 46 cents. SPY coming down a little bit. It'd be a very flat day in the market. Let's see what happens. We got 9 minutes until Jerome starts to speak. And then Jerome comes on at 2:30. Oh, what's up, Aria? How you doing? Sell the rumor, buy the news. I guess that's what we're doing these days, especially with Fed meetings. Can I say hi to Beth and Renee? What's up, Beth and Renee? How you doing? Hedge funds are falling off left and right. I mean, if they kept that selling wave up, that short wave going into the Fed meeting, I mean, they're stupid. I mean, I can listen, like me, 22-year-old college finance major, which is irrelevant because I could be any major right now and figure because they're not going to teach you any of this. Was like, hey, it's probably priced in. It's probably priced in. Like after the moves that we've seen, like that's the definition of like, it's priced in. Who bottom tick call options on the SPY? That was a $5 move. I don't know. Whoever did that though, if you did, you're an absolute genius. Doing good, STV. Thanks. There we go, Aria. Oh, Jerome, talk more about printing digital currency. Shout out to Fred. Yep. I don't know. I mean, we're selling off a little here, but nothing too crazy. I mean, GME is getting hit a little here. I mean, the short interest on Amy right now is ridiculous. It's insane. I'm going to be like you guys and just pull up Ortex every 10 seconds, like 20.73% now. This is nuts. Returned shares, 1 million. Borrowed shares, 3.56 million. Borrowed change, 2.55 million. All righty. Amy coming down a little bit here. Ho, what's up, Pam? How you doing? Hedge fund bites the dust. It does. Did you get TMI's text message? Which one? This morning? When he was talking about... Yeah, I did. When you guys were telling him to ask me what time the Fed meeting was. Haha, very funny. What's max pain today? I mean, there's no max pain for today, but this week it's 30. Last stand before Jay Powell speaks. We got 6 minutes, people. We got 6 minutes until Powell. And then we're going to sit back, relax, and listen to Jerome tell us that the economy is great when it's not. I'm ready for the best year of my life. Let's go, Amy. Yeah, I mean, we're going to have to be careful next year about around the rate hike stuff. But, I mean, we've seen the market price in so much. Like, Has the taper really affected a whole lot? Not really. Like it honestly pumped up the markets when the Fed announced it last time. And that's kind of what we see today. I mean, it's not, there's no real continuation move off of it right now. But in November, that Fed meeting, that was nasty. Thank you, STV. Thank you guys. It's transitory, of course, of course. I mean, they're gonna retire that word. Did the Fed already announce no rates until 2022? Yeah, I mean, they said no change in the Fed funds rate now, so yes. I mean, this would be the last time that they did it. Doc, he needs to make a $50 move today. Ryan, I don't think so. I mean, I have so much. I mean, I actually don't have so much time. I just want these contracts to come back to a little green, just a little green. Did the Fed speak? No, we got their statement though. It's transitory. Increasing tapering to 30 billion. Yep, that's what the market was pricing in though, so it's fine. April 1st could be key area to watch if tapering wraps by March. Yeah, then we start get rate hikes, but they're gonna do it very, very gradually. Like they're gonna do little rate hike, and they're just gonna keep it going. All right, coming back down now on the SPY and everything else. Let's see. I mean, there's nothing really terrible coming out. Let me see if there's anything on the news feed. Nothing. Let's do it. Drink every time they say transitory. I mean, do it. Might as well. I mean, I'm probably not supposed to give anybody drinking advice, right? I feel like that's bad because I would just say do it. What do you got to lose? JPM, Bank of Morgan, and GS selling off big time. Oh, banks are getting hit? Yeah, but like, is it selling off after they just ripped? Yeah, I mean, they popped. So, but they sold off well below. Interesting. Okay, so here's the thing. If they increase rates, that would hurt banks. Rate hikes are going to hurt banks. So if they're pricing in more rate hikes, then that's not going to help banks. So our friends over at Goldman Sachs, who are 133 to 1 levered, over here at GS, have fun with that. Why wait for the word transitory? Drink anyway. You could. Inflation is transitory. It has to pass 6.8 on its way to the moon. Yeah, just transitioning to the moon. What will help us? I mean, this right here. This is good news that came out of the Fed today. In my opinion, this is, I mean, they're taking a more hawkish stance, but it's what they expected. It all comes down to market expectations. If they price it in, if that's what they expect, then awesome. They're going to let things continue to ride. That helps banks rate hike. Does it? Huh, interesting. Wouldn't we want rate hikes to force over leveraged funds? Not really. The thing is people don't really know what the rate hike's going to do. Like, you just don't know. Like, we've had so much money pumped in. We don't know what happens when that liquidity starts to leave. Because that's essentially what rate hikes do. It's going to suck a little bit of money out of the system. We wanted an interest rate hike? No, we didn't. If you wanted the market to tank, then yes. But other than that, it's not time yet. They also need to finish their taper in order for them to do that. No, a freaking little hedge fund did not cover just now. Look, it's the same move everywhere. Same move. Look, we ran up, they sold it off, and then it popped. Ran it up, sold it off, then it popped. Ran it up, sold it off, then it popped. It's the same move everywhere. Like, you can't be like, oh, they covered. No. That's not a big enough move for them to cover. And again, with the volume today, 39 million. Like, what are these volume candles right now? The volume was basically the same here. What is it? 295,000, 308,000, 308,000. That is not covering volume at all. So don't let anybody tell you that move that we just saw there was little funds covering. It's not. We saw the move before. It sold off at, like, look, 295,000, 300,000, and 300,000. What is that? Like 900,000, a million shares? Whatever. They can cover a million shares if they want. There's 100 million of them out there right now, at least 100 million. Imagine thinking this is covering. Yeah, no, none of that. We will have none of that covering FUD on this channel. Been a holder since February and so worried I'm gonna end up losing money in this after being at 40K. This is rough. Austin, I mean, we're all in this for the same thing. And the thing is that the premise that we have in our head is that these stocks are heavily manipulated, and that the short interest and the data that we're seeing isn't actually the right data. So then when we see the actual like manipulation and the BS shorting actually play out, I mean, we can't be mad about it because we bought in expecting that. That's how I view it. It's like, oh, they're gonna just really jack up the short interest and start over shorting it again. By all means, like, it's just going to make it more difficult for them when we start to run up again. There's just going to be more shorts outstanding, and there's going to be more buying volume coming back in eventually. I think Trey tweets this out sometimes. It's like all shorts are future buyers. Did Powell speak? Oh, right now. Hold on. Where is he? Right here. Nothing's happening right now, though. Let me refresh it real quick. Oh, here he is.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept interest rates near zero and updated its assessment of the progress that the economy has made toward the criteria specified in the committee's forward guidance for interest rates. In addition, in light of the strengthening labor market and elevated inflation pressures, we decided to speed up the reductions in our asset purchases. As I will explain, economic developments and changes in the outlook warrant this evolution of monetary policy, which will continue to provide appropriate support for the economy. Economic activity is on track to expand at a robust pace this year, reflecting progress on vaccinations and the reopening of the economy. Aggregate demand remains very strong, buoyed by fiscal and monetary policy support and the healthy financial positions of households and businesses. The rise in COVID cases in recent weeks, along with the emergence of the Omicron variant, pose risks to the outlook. Notwithstanding the effects of the virus and supply constraints, FOMC participants continue to foresee rapid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 5.5% this year and 4% next year. Amid improving labor market conditions and very strong demand for workers, the economy has been making rapid progress toward maximum employment. Job gains have been solid in recent months, averaging 378,000 per month over the last 3 months. The unemployment rate has declined substantially, falling 0.6 of a percentage point since our last meeting and reaching 4.2% in November. The recent improvements in labor market conditions have narrowed the differences in employment across groups, especially for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor force participation showed a welcome rise in November, but remains subdued, in part reflecting the aging of the population and retirements. In addition, some who otherwise would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. At the same time, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. How long the labor shortages will persist is unclear, particularly if additional waves of the virus occur. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate declining to 3.5% by the end of the year. Compared with the projections made in September, participants have revised their unemployment rate projections noticeably lower for this year and next. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. As a result, overall inflation is running well above our 2% longer run goal and will likely continue to do so well into next year. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, but thus far, wage growth has not been a major contributor to the elevated levels of inflation. We are attentive to the risks that persistent real wage growth in excess of productivity could put to upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline to levels closer to our 2% longer run goal by the end of next year. The median inflation projection of FOMC participants falls from 5.3% this year to 2.6% next year. This trajectory is notably higher than projected in September. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. We will be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee reaffirmed the 0 to 1/4% target range for the federal funds rate. We also updated our assessment of the progress the economy has made toward the criteria specified in our forward guidance for the federal funds rate. With inflation having exceeded 2% for some time, the committee expects it will be appropriate to maintain this target range until labor market conditions have reached levels consistent with the committee's assessments of maximum employment. All FOMC participants forecast that this remaining test will be met next year. The median projection for the appropriate level of the federal funds rate is 0.9% at the end of 2022, about a half percentage point higher than projected in September. Participants expect a gradual pace of policy firming with the level of the...
All right, it's going to be higher because they know, and they're lying because inflation has run way higher than expected. All right, back to our regularly scheduled Powell.
And no one knows with any certainty where the economy will be a year or more from now. At today's meeting, the committee also decided to double the pace of reductions in its asset purchases. Beginning in mid-January, we will reduce the monthly pace of our net asset purchases by $20 billion for Treasury securities and $10 billion for agency mortgage-backed securities. If the economy evolves broadly as expected, similar reductions in the pace of net asset purchases will likely be appropriate each month, implying that increases in our securities holdings would cease by mid-March, a few months sooner than we anticipated in early November. We are phasing out our purchases more rapidly because with elevated inflation pressures and a rapidly strengthening labor market, the economy no longer needs increasing amounts of policy support. In addition, a quicker conclusion of our asset purchases will better position policy to address the full range of plausible economic outcomes.
Like super high hyperinflation.
In the economic outlook. And even after our balance sheet stops expanding, our holdings of securities will continue to foster accommodative financial conditions. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to complete the recovery in employment and achieve our price stability goal. Thank you. I look forward to your questions.
Oh,
Thank you, Mr. Chair. We'll go to Rachel from the Washington Post.
here we go.
Thank you very much, Michelle, and thank you, Chair Powell, for taking our questions. The latest FOMC materials say that the FOMC thinks it will be appropriate to keep rates near zero until labor market conditions reach levels consistent with maximum employment. And there are also 3 rate hikes penciled in the projections for next year. In order to set up those hikes, what will maximum employment have to look like? When will you know that that threshold has been met? And how will that be communicated? Thank you.
So maximum employment, if you look at our statement.
Okay, that's just on like that is okay. That question kind of irrelevant. I see a question about reverse repos that is very important. Reverse repos is not the Fed buying assets. It's the banks buying assets from the Fed, so it's different. So the reverse repo may not slow down because remember the banks are the ones that are offloading the cash to the Fed because they have too much cash in their system. It's not the Fed exchanging cash for security. So I just want to make that clear.
So that's a judgment for the committee to make. The committee will make a judgment that we've achieved labor market conditions consistent with maximum employment. When it makes that, it is admittedly a judgment call because it's a range of factors. Unlike inflation, where we have one number that sort of dominates, it's a broad range of things. So as I mentioned in my opening remarks, in my view, we are making rapid progress toward maximum employment. And you see that in, of course, in some of the factors that I mentioned.
Great, thank you. Steve.
The reverse repos. Okay, so going off that, the reverse repos will chill out after they start raising rates because then it's going to suck money out of the banking system. Right now, because rates are so low, the banks have too much money. So the only way to really get that money out of the banking system is raise rates. So that's when we'll start to see the reverse repo slow down.
Address the current inflation problem. Won't the impact of today's changes not really have any impact for 6 months or a year down the road on the current inflation problem? And aren't you actually lengthening that time by continuing to buy assets such that it could be not until the long and variable lag after you end purchases sometime in March that you'll start to have any impact on the inflation problem?
So on the first part of your question, which is why not stop purchasing now, I would just say this. We've learned that in dealing with balance sheet issues, we've learned that it's best to take a careful, sort of methodical approach to make adjustments. Markets can be sensitive to it. And we thought that this was a doubling of the speed. We're basically 2 meetings away now from finishing the taper. And we thought that was the appropriate way to go. So we announced it, and that's what will happen. The question of long and variable lags is an interesting one. That's Milton Friedman's famous statement. And I do think that in this world where the global financial markets are connected together, financial conditions can change very quickly. And my own sense is that they get into financial conditions affect the economy fairly rapidly, longer than the traditional thought of, a year or 18 months, shorter than that, rather. But in addition, when we communicate about what we're going to do, the markets move immediately to that. So financial conditions are changing to reflect, the forecast that we made, and basically, which was, I think, fairly in line with what markets were expecting. But financial conditions don't wait to change until things actually happen. They change on the expectation of things happening. So I don't think it's a question of having to wait.
Can I just follow up in thinking about having to wait? Is it still the policy or the position of the committee that you will not raise rates until the taper is complete? Thank you.
Yes, the sense of that, of course, being that buying assets is adding accommodation and raising rates is removing accommodation. Since we're 2 meetings away from completing the taper, assuming things go as expected, I think if we wanted to lift off before then you would stop the taper potentially sooner. But it's not something I expect to happen. But I do not think it would be appropriate, and we don't find ourselves in a situation where we might have to raise rates while we're still purchasing assets.
Okay, let's go to Colby at the FT.
Thank you, Michelle. Chair Powell, I'm curious exactly how much distance you think there should be between the end of the taper and the first interest rate increase. Back in 2014, the guidance that was given was for the Fed funds rate to remain at the target level for a considerable time after the end of the asset purchase program. Is that an approach you support now, or does the current economic situation warrant something a bit different? Thank you.
So we haven't made any decision of that nature. And so, no, I wouldn't say that's our position at all. We really haven't taken a position on that. I will say that we did talk today. We had our first discussion about the balance sheet, for example, and we went through the way the sequence of events regarding the runoff and that sort of thing with the balance sheet last time. And I think people thought that was an interesting discussion. They thought that it was informative, but people pointed out that this is a significantly different economic situation that we have at the current time, and that the differences that we see now would tend to influence how we think about the balance sheet. And the same thing would be true about raising rates. I I don't foresee that there would be that kind of very extended wait at this time. The economy is so much stronger. I was here at the Fed when we lifted off the last time, and the economy is so much stronger now, so much closer to full employment. Inflation is running well above target, and growth is well above potential.
You're cherry
There wouldn't be the need for that kind of long delay. Having said that, we'll make this decision in coming meetings, and it's not a decision that the committee has really focused on yet.
Let's go to Nick at the Wall Street Journal.
Thank you. Nick Timoros at the Wall Street Journal. Chair Powell, in March, you answered a question about maximum employment like this. You said 4% would be a nice unemployment rate to get to, but it'll take more than that to get to maximum employment. More recently, you have hinted at a possible distinction between the level of maximum employment that's achievable in the short run versus in the long run. Has your view of the level of maximum employment changed this year? And if so, how? And how close is the economy right now to your judgment of the short run level of maximum employment? Thank you.
Right. So the thing is, we're not going back to the same economy we had in February of 2020. And I think early on, the sense was that's where we were headed. The post-pandemic labor market and the economy in general will be different. And the maximum level of employment that's consistent with price stability evolves over time within a business cycle and over a longer period, in part reflecting evolution of the factors that affect labor supply, including those related to the pandemic. So I would say, look, we're at 4.2% now, and the unemployment rate has been dropping very quickly. So we're already in the vicinity of 4%. The way in which the important metric that has been disappointing really has been labor force participation, of course, where we had widely thought, I had certainly thought that last fall, as unemployment insurance ran off, as vaccinations increased, as schools reopened, that we would see a significant surge, if you will, or at least a surge in labor force participation. So we've begun to see some improvement. We certainly welcome the 0.2 improvement that we got in the November report. But I do think that it feels likely now that the return to higher participation is going to take longer. And in fact, that's been the pattern in past cycles, that labor force participation has tended to recover in the wake of a strong recovery in unemployment, which is what we're getting right now. So it could well have been that this cycle was different because of the short nature of it and the very strong, the number of job openings, for example. You would have thought that would have pulled people back in, but really it's the pandemic, it's a range of factors. But the reality is we don't have a strong labor force participation recovery yet, and we may not have it for some time.
That's because a lot of people know that they can get higher paying jobs, and the only jobs that'll accept them right now are jobs that they don't want to take. That's literally what's been going on. Like that's what he's talking about right there, labor force participation.
If I could follow up, you've talked recently about risk management. And so does that mean that the committee might feel compelled to raise interest rates before you're convinced that you've achieved the employment test in your forward guidance?
So this is not at all a decision that the committee has made, but you're really asking a question about how our framework works. And yes, there's a provision, what used to be called the balanced approach provision, that says in effect that in situations in which the pursuit of the maximum employment goal and the price stability goal are not complementary, we have to take account of the distance from the goal and the speed at which we're approaching it. And so that is in effect an off-ramp which could, in concept, be taken, and it's in our framework. It's been in our framework a long time. I've talked about it on a number of occasions. It is a provision that will enable us to, in this case, because of high inflation, move before achieving maximum employment. Now, as I said, we're making rapid progress toward maximum employment in my thinking, in my opinion, and I don't at all know that we'll have to invoke that paragraph. But just as a factual matter, that is part of our framework and has been really for a very long time.
Thank you.
Thanks. We'll go to Howard at Reuters.
Thanks, as usual. So I guess I got to ask about the elephant in the room, which is the Omicron variant. This seems to already be pushing one of your colleagues, the Bank of England, off its course. Things have evolved very.
The elephant in the room? I don't know about that one.
To expect it to. So I'm wondering, in your feelings about this, are you convinced that this is going to be perhaps a more infectious but less serious variant of the virus, or are you simply confident that the U.S. economy can continue its divorce from the pandemic?
Well, I think there's a lot of uncertainty, which is why we called it out in our statement, our post-meeting statement, as a risk. We follow the same experts, and we talk privately to the same experts that everyone else does, and read the same articles in the paper and the same research. And so you mentioned the early assessment is highly transmissible, perhaps not as severe, some continuing protection from existing vaccines and also existing immunity from having had the disease. That's a first draft. We're a long way from knowing what it will turn out to be. It may well come to the United States and replace Delta as the dominant variant fairly quickly. That could easily happen.
That would be good. Honestly, that would be good. With all the reports that have come out about it, it would be good if that happened. People would be like, oh, yeah, it's not that bad. Because that's what the reports have saying. This isn't like a whole like, oh, it's not that bad. No. That's what the reports have said that it is. So I don't know. Let's see.
On either inflation or growth or hiring, it can, on top of what's already going on, which is quite a strong, wave of Delta that's hitting large parts of the country across the northern United States and all the way to the eastern seaboard, and now coming down. We're having quite a wave of Delta. So coming in on top of that, again, it's very difficult to say what the economic effects would be. I do think wave upon wave, people are learning to live with this. More and more people are getting vaccinated. So people who get the new variant, it affects them much less than it tends to affect in the aggregate people who are not vaccinated. So the more people get vaccinated, the less the economic effect. It doesn't, won't have an economic effect. Delta had an effect of slowing down hiring, and it actually it had an effect on global supply chains, and that sort of that hurt the process of the global supply chains getting worked out. So it can have an economic effect. I just think at this point we don't know much. We'll know a whole lot more in 3 weeks, and we'll know more than that in 6 weeks.
Fair.
But if I could follow up, you're clearly from a risk standpoint comfortable putting away one of your tools pretty soon, which sort of implies that whatever Omicron brings, you're comfortable the economy can handle it without quantitative easing.
Yes. I think if you look at the state of the economy and the strength of demand, the strength of just overall demand, the strength of demand for labor, look at inflation, look at wages. I think moving forward the end of our taper by a few months is really an appropriate thing to do. And I think really Omicron doesn't really have much to do with that.
Thank you.
Let's go to Gina at the New York Times.
Hey, Chair Powell. Thanks for taking our questions. I wonder if you could talk a little bit about what prompted your recent pivot toward greater wariness around inflation.
Sure. So I guess I would go back and, it's been a continual process, really. Inflation really popped up right in the late spring last year. And we had a view, it was very, very widely held in the forecasting community, that this would be temporary. It was quite narrow. A limited number of factors were causing it. And there was a decent amount of evidence to support that view that it would be temporary or transitory, as we said. Certainly, we had 5 months of declining month-on-month, monthly readings of inflation, but we didn't see much in the way of progress on labor supply or on other supply side issues. Then in September, I'd say after Labor Day, we started to see, it started to become clear that this was both larger in its effect on inflation and more persistent. And of course, I said so on many occasions. And one of the consequences of that is that we moved the taper forward. And it's a much faster taper than had been planned. So We've been adapting. I've been saying we're adapting our policy. So come to your real question. We got the ECI reading on the eve of the November meeting. It was the Friday before the November meeting, and it was very high, 5.7% reading for the employment compensation index for the third quarter, not annualized, for the third quarter, just before the meeting. And I thought for a second there whether we should increase our taper. Decided to go ahead with what we had socialized. Then right after that, we got the next Friday after the meeting, 2 days after the meeting, we got a very strong employment report and revisions to prior readings and no increase in labor supply. And the Friday after that, we got the CPI, which was a very high reading. And I honestly, at that point, really decided that I thought we needed to look at speeding up the taper, and we went to work on that. So that's really what happened. It was essentially higher inflation and faster, turns out much faster progress in the labor market. Really what's happening is the unemployment rate is seems to be catching up with a lot of the other readings of a tight labor market, 0.6 over one cycle. So that's really what happened. And, widely supported in the committee today, as you can see, unanimous vote. But beyond that, I think widely supported this move.
If I could just follow up quickly, you noted that the ECI was one of the things that made you nervous, but you also said earlier that you don't see signs that wages are actually factoring into inflation yet. And I guess I wonder how you think about sort of the wage picture as you're making these assessments.
So you quoted me correctly. It's so far we don't see wages are not a big part of the high inflation story that we're seeing. As you look forward, let's assume that the goods economy does sort itself out and supply chains get working again, and maybe there's a rebalancing back to services and all that kinds of thing. But what that leaves behind is the other things that can lead to persistent inflation. In particular, we don't see this yet, but if you had something where real wages were persistently above productivity growth, that puts upward pressure on firms, and they raise prices. It would take something that was persistent and material for that to happen, and we don't see that yet. But with the kind of hot labor market readings, wages we're seeing, it's something that we're watching. And the other thing, of course, is rents, which are very important. Owner's equivalent rent and rent. That's another thing which is very economically sensitive. Unlike the things that are causing the inflation now, this is economically sensitive, and so would be expected to move up. And so as some things go down, the question is, where will we be when we come out the other side of this? And we need to keep our eyes on those things.
Thank you.
Thanks. We'll go to Chris at the AP.
Thank you. Well, next year you could see growth slowing, and you could see some disinflation, particularly if the Omicron variant does spread more widely. Would you delay rate hikes in that situation? And how would you think about that? And also, how would you explain rate hikes if you do follow through in that kind of situation with inflation fading and growth slowing? How would you explain rate hikes to the public, particularly those who may still be looking for work?
Well, as you know, the SEP is not a plan. It's not something we debate, negotiate over, or really discuss in terms of what the right answer should be. People write down their assumptions, their assessment of appropriate policy based on their economic forecast. And so the median, what you're talking about, the 3 rate increases, that's the median of the committee. The median of the committee is also that growth will be.
All right. What do you guys want to do about Powell? We got the stuff that we needed, but we can leave him on because he still could say something because it's questions. He could come out and say something wild. I don't think he's going to say anything wild. You guys are really split too on if we leave Powell on or off. So, I mean, we've gotten the pop out of the market. I mean, it's still on the uptrend. It's just bouncing off of this 50 right now. Amy at 23.69. We can do both, and we can flicker in and out of Powell. What do you guys want to do? Also, if you guys don't mind, just dropping some likes on the stream. Just helps out with the YouTube algorithm, getting some more people in here. We got a lot of people in here right now listening to Jay Powell. So we'll probably put him back on, shut him down. He will say no. People, you guys are, it's 49.51 right now on the poll. He doesn't even look like Powell. I don't look like Powell. I am not Powell. Or text on AMC, please. All right, we can do that real quick. We'll take a little bit of a break from Powell. How about that? 20.75. Jesus. It is getting up there. Oh my. Come on, Apple. Come on, Apple. VIX, talk about Anchorage Capital. We'll be doing that tonight. We will be doing that tonight. Can I vote twice? I don't know. You change your vote. I see. Oh, okay. Now it's keep Powell. All right. So we're going to put Powell back on.
You've talked a lot about the different ways that you might measure maximum employment. But from what I understand, and that's still basically the way that you know that you're there, is inflation. So is that understanding correct? And how are those signals likely to be clear right now, given that you have inflation that's caused by, these supply chain disruptions that might also lead to, inflation in wages and those sorts of things. So how do you sort of like tease out the signal of maximum employment?
Okay, so let me start by saying that the inflation that we got was not at all the inflation we were looking for or talking about in the framework. It really was a completely different thing. It was to do with, strong monetary policy and fiscal stimulus into an economy that was recovering rapidly and in which there were these supply side barriers, which effectively led to, in certain parts of the economy, of what you might call a vertical supply curve. So, automobile purchases are very interest rate sensitive, and you would think demand would drive up the quantity of cars, but it can't because they don't have semiconductors. So that was a very different kind of inflation. This is not the inflation we were looking for under our framework at all. It's nothing to do with our framework, and the way we've approached it is really nothing to do with our framework. But come to maximum employment, which is really your question. How do you know? So I think you look at prices and quantities. If you want to look at maximum employment, you look at prices and quantities, and the main price you look at is wages. It's one of the things you look at, and it's. So I mentioned a number of the things. You could get to 20 if you wanted to easily, but labor force participation, the unemployment rate, different age groups of, prime age labor force participation in particular gets a lot of focus. The JOLTS data get a lot of focus. And wages, that's really one of the great signals. The quits rate is another one. The quits rate is really one of the very best indicators, according to a lot of labor economists, because people quit because they feel like they can get a better job. And there's record amounts, historically high levels of that going on, suggesting again that you've got a very tight labor market. So on wages, that's the price indicator we look at to tell us, along with all the other data, whether we have labor market conditions that are consistent with maximum employment. And so that's how we think about it. But the one of the complications is that, again, we've got to make policy in real time. So how do we think about that? If we think we can make labor, participation might move up. Let's say we knew that it would start to move up in 2 years, would we wait 2 years when inflation is running way above target? Probably not. So you have to make an assessment that what is the level of maximum employment that is consistent with price stability in real time is one way to think about it.
Just to kind of follow up on that for a second, if you do.
All right, I've had enough Powell. No more Powell. No more Powell. Back to AMC and GME. All right, we got the SPY moving up a little bit. Amy trying to make that push above 24. I mean, I may or may not have gotten some Apple calls during the call. Maybe, maybe not. I don't know. But I think we're going to get a little bit of a pop going into tomorrow. Even if it's a small pop in the market, just because of what was said, it just met market expectations. You guys saw the reaction back here, that initial sell-off when it just hit 2 p.m. and there was a Fed meeting. So sold off a little bit and then ripped off of the news once the algos got a hold of what was going on. So look, I mean, now we're getting a nice little boom boom candle here. Here we go. Here we go. All right. I want to see that test of 25 on Amy by the end of the day. Come on. We need everything to start making its way back up. We're starting to get going. Here we go, people. But yeah, kick rocks, Powell. All right, we're going to end the poll too. Apparently, we're running a dictatorship over here. I would not call that a rip. I would. I mean, what's this right here? 2378. I mean, that's a nice green candle right there. Let's see. Oh, Apple. Are we going to hit another dirty Apple play? I don't know, but it would be very, very nice if we did. All righty. As soon as you turned off Powell, it rips. Okay, so we should just turn off Powell more often. I think that's what we got to do. Dude, he's gonna beg him reload it. Jeez. What is it? All right. This isn't the inflation you're looking for. No, it's not. That comment was really stupid. He was like, this isn't the inflation that we wanted. And I was like, all right, bro. Like, what do you want? Just assets that you're holding to inflate? Like, that's literally what you're saying to us right now. Yeah, so if you guys don't mind, just dropping some likes on the stream, just help get more people in here. So thank you guys. Let's see. You guys are having fun. I'm having fun. Let's have some fun. We're no more Powell. Powell's done. Powell's been banished from STV's live stream. He's been banished. No more Powell. All right, here we go. Sure, Powell. Turn him back on, then off again like 5 times. We can do that. Did anything go as they wanted? Pretty much everything went as we expected. Should have grabbed Apple calls when it broke 174. Yeah, I mean, I'm probably going to play. This is what I'm looking for. 180 breakout. That's what I'm looking for. A 180 breakout on Apple. Because if that happens, we played the 170 breakout last week, and that went spectacularly. So I don't know. We're seeing a lot of bullishness in the market. I mean, we've been trading the absolute BS out of Apple recently. It's ripping right now. So I don't know. Let's see. AMC getting a little bit of action here. I still want to see it push green and then get back up to 25. That's what I'm looking for. Powell on, Powell off. No, wait 10 seconds to reboot. No. All right. Is TMI in here yet? Nah, he was walking his dog. We'll get TMI in here in a little bit too. Here we go. Break out the ban. Powell has been removed. Oh, Apple, you dirty dog. You dirty dog, Apple. Print it like, oh, Trap TV. That was it. I want to see that boom, boom. I do too. Powell on. All right, ready? Powell on.
This is how they want to max.
Powell off. Powell on.
Certainly their choice.
Powell off. All right. Somebody make me one of those dubstep remixes now of Powell on and Powell off. All right. Spies coming up. AMC coming up a little bit too. Here we go, people. GME getting a little jumpy. Let's go, Amy. Here we go. Let's see here. The spot. Ooh, Apple. Nice. 10% on the contracts right now. Spectacular. Looking for 1,000%. That would be sweet because the price levels of like where it is now is much more attractive than what it was when I traded them last time. Like ooh, Amy, come on now. Come on now. Here comes Spy. See, I think this was just the last bearish catalyst until we really start to get going. Welcome to Powell Hour. Here we go. Be careful with that newfound power you have. Which one? Powell on, Powell off? This one?
What does the labor market look like?
That one? I don't know. I feel like that's going to piss everybody off, so we should stop doing Powell on, Powell off. Has to be what's going on with Mark and Trey and Adam back. No. What? Oh, the NFT stuff? Yeah, that was just a, what do you call it? That was just a suggestion made, and AMC can't really do it. That's all that really goes into it. Quick look at TLT. TLT is most likely tanking right now, like most likely falling. Oh yeah, TLT. I mean, where is this? It's getting a little choppy right after 2 and then just goes off a cliff. Actually, yeah, off a cliff once Powell starts to speak. So that's kind of one of the things that we're seeing reflected in the market here. The bonds are chilling out and letting things go on a run, which is pretty sweet. Not gonna lie. We're finally starting to see the TLT like correlate to SPY, which is nice. All right, Apple. I'm looking for that 180 breakout right now. If SPY really starts to get going and we get that 180 breakout on Apple, I mean, people were calling for that Apple Gamma. That's why I started looking at it. It's not as dirty as it was the first time we traded it at 160, I think, but it's still nice. Like it's not like if you look at it here, 75,000, 41,000, but there's a lot of contracts that are already in the money, like 177.50. That's a decent amount of contracts. So let's see. Amy getting a pop here. Here we go. SPY pop, Apple little pop. Here we go, people. 2.2K viewers. Was that my record high? Yeah. Well, I think it was 2,300. Trey did not call out AA unless he did on the channel, but I don't think so at all. I mean, on Twitter, I highly doubt that because he was very supportive of what AA was doing last week. So I don't think any of that has changed. Oh my God, my mouse is going to die now. Are we playing this silly game again? All right. I guess. Oops. Knocking over my empty energy drink containers. Here we go, people. AMD calls are printing. I mean, right now I'm doing pretty good on these Apple calls, but AMD might be getting a little bit of action here. AMC right now, 24.23 for anybody that's on the audio. GME 147.22. Here we go. Really did on Twitter just now. Oh my God. Hold on. What's happening now? You guys, why did you? hold on. Oh, it's literally just Trey asking why he pulled out of the of the Apes Together Strong documentary. That's what it is. It's literally like what over scheduling concerns. Yeah, I understand, Mouse. You're gonna die. We're gonna kill the mouse again. Mouse on, mouse off. That's what we're doing these days. All right, Amy's getting a little action here. Come on now. Check mod chat. Yeah, I can do that. I'll have to do it on my phone real quick. All right. Come on, Amy. Makes sense. Okay, so with the whole Adam Aaron thing, the whole movie is going to be based. The movie is based on like kind of short squeezes, Apes Together Strong, market manipulation, and stuff like that. Adam Aaron may not be able to be involved in something like that right now. That's not like him being like, screw you, apes. It's like, oh, he doesn't want the company or himself to be like liable for anything that like is set. Because here's the thing, like they would, if I was them, I would just ask him questions, be like, have you looked into this, blah, 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 and ask him like the hard questions. And he's like, I can't answer that legally. Like it can't happen. So I don't know. We'll see what happens. Yeah, shorted the mouse. Get that red off my screen. You know what? The SPY is coming up though. Amy at 24.20, 24. I think we have a good chance to break 25 going into the end of the day. Yes, STV dead on. Yeah, like he can't. I don't think he can do that. Like he said many times, like he can make his statements about like high frequency trading in general. That what he thinks in general has been going on with the stock. Like when he talked to Trey and when he made on the interview about like derivatives. I think he can make statements like that, but if there's like a whole movie, like a documentary based around like the short squeeze, I think that is close to crossing a line. Maybe it's not, and maybe he's just messing around. I don't know. But I think it's close enough to the line where he would have to be like, I don't know. I'd have to rethink this one. But he did like already commit to doing it. So I don't know what else is going on. So I mean, this is like what we say sometimes where there are situations out there that a lot of people are going to be speculating random like conspiracy theories about on, but unless you're actually directly involved in it, you're never actually going to know. And if you see the conspiracy theories about a situation that like you're involved in, you're going to be like, this is craziness. But yeah, can you play Boom Boom Candles or Show Us the Money? I could, but then I can't talk. I could maybe. Neo's dropping. Pfizer Gamma thoughts. I think Pfizer. I mean, I have Pfizer calls now. I have Pfizer and AMC calls now. Let me see. Let's see. Apple coming down. That's. I mean, I don't like that, but you know, Pfizer coming up decently here, up 15% on these contracts. I went a little smaller on there, but I don't know. Let's see what happens. I've almost hit a couple of big Pfizers, but Powell. We just need AA to run the company. That's it. Yeah. Legally, he has to be insanely careful. Even the ATER thing is like, oh, be careful. I think it's being very, yeah, I think so. I don't know. AA wants the interview after we lift off. Yeah, that would be cool. Like if the interview is going to be done post squeeze, perfect. Awesome. He'll do it all day long. But if it's pre squeeze, it could be seen as like him trying to set, you just got to be careful. You don't want anything bad to happen with AA. Like that's our CEO. Like he's really, really good at what he does. Let's see. Please don't play music. Allow your stream to have its own identity. Yeah. Apple above 180. No, it's not. You're lying to me. And that's not. Wait, is it really? No. No. Is it? No. It's above 178.50 though. Coming back up. We're going to need Amy to get some of these candles though. No real hard questions would be on the last one. No, they actually asked him some hard questions. They were like, why did you just switch your stance on inflation like that? And he's like, oh, like, it's just, it's like, we can't hide it anymore. That's really what he said. That's essentially what he said. He was like, yeah, CPI data came out and we can't hide it anymore. So now we have to, now we have to increase the taper, which is fine. Like as long as it's within the market expectations, we're good to go. So now, I personally don't see any bearish catalyst holding back the market going into the end of the year in the first quarter of next year. So it could be boom, boom time for a lot of things, which would be sweet. He just said more persistent. So not transitory at all, like 0% transitory. Apple hit 182.13. When was this? I mean, that might be like the all-time high of Apple. 52-week high. 182.13. That doesn't help me right now, guys. I need it to go there now. I need it to go there after I buy calls. Are we clear? Cool. All right. Back to our now we've got an alive mouse. We got SPY coming up here. We got Apple trying to do its thing. I mean, it's getting hit a little bit here. Amy popping up a little bit. Transparency. Thank you so much for the super. I appreciate it, man. I wonder if Pico is listening, but yes, play ape. Maybe AMD ripping up 6. Maybe I should have just went with AMD instead. I mean, GME is getting a little move here. Amy's, oh, ho, ho, ho. There she goes. There she goes again. Do you think they will force coverage due to the first? I mean, they're not going to, the government's not going to force. My VIX calls got killed. Yeah, it happens. I mean, that's what I was saying earlier about being careful about going into this Fed meeting with the price action that we've seen recently. Like, it doesn't look like they're going to really like shut everything down. How's Pfizer doing? Pfizer ripping. Jeez. Here we go on Pfizer. Boom. That's nice. Vortex data for BBIG. Of course, MCrease. We got Amy ripping right now, though. Here we go. All right. Vinco Ventures. Here we go. All right. What do we want here? 21.65. 784,000 shares returned. 1.22 million borrowed. 99% utilization, or basically 100%. Minimum cost to borrow, 26.54%. High, 470%. All right. All right, Apple. Doc, you go. I would love. Hood is ripping. That's unfortunate. That's why when we were talking about earlier, those hood puts, I was like, I don't know. The market could just rip and they're going to go with it, especially selling off. How is AMC short interest? Very, very, very high. Same thing with GME. GME was in the 15 point, I think it was 15.33 the last time we saw it. Right now, AMC 20.77 estimated short interest. Like, come on now. All right, hold on. Let's see. Is Powell talking nonsense again? Let's see. Powell, cyber. Oh my God. Is that why we're selling off right now? I swear to no. All right, that was a pop. He says cyber attack could be a major financial stability risk. Duh. It's okay. So could a solar flare. Like, thanks, Powell, for AMC just flickered green here. Here we go. We're getting that green breakout. Apple breaking out too. SPY getting going here. Oh boy. Docky running. Love to see that. Need those contracts to come back from the grave. They might, honestly, here. That might get them. Oh, Amy. Oh, Amy. Don't you play with me like that. Come on now. What are these docu contracts down? 43%. Awesome. Yeah, but we're crushing it on Apple and Pfizer. Amy, come on. We need that 25 out of you. That's what we need out of you, Amy. 25. Come on, people. All right, rockets and basketballs. Here we go. I mean, we don't really need basketballs. We really just need rockets right now in the chat. Let's do it. Yeah, also, that was my record stream. Thank you, guys. 2,300 people in there at one time. Thank you. I appreciate it. You guys are wild. Amy with the fat green candle. Oh, yeah. Oh, yeah. She wants to go. Here, see, this is what we were talking about. Right as we get some news from the Fed that we could get some bullish momentum and really start to get going, we could see some bullish, I'm going to say it, bullish action out of Amy. Here come the rockets. Let's go. Ortex on Prague. Yeah, I can do that for you real quick. Prague's Ortex was looking a little bit better. It was looking a little bleak there for a bit, but again, like they're going to mess with it. Let's see. Ortex on Prague, 19.94% estimated short interest, utilization 99.8, pretty high cost to borrow, days to cover, pretty low though. All right, Amy, cool off a little bit, and then we're gonna need you to go to Boom Boom Town. Same thing with you, Apple and Pfizer. Docu ripping. Oh, there we go. How's Pfizer doing right now? Pfizer Gamma. I left for seconds. Oil and travel continue to rocket. I bet they do. Rhode Island, thank you so much for the super. Still believing. Apes not leaving. There we go. Crypto booming. Ooh. M. Kriegs, what does that tell us? Come on, Amy. What's the day high? 2478? And we're close. Well, that was right in the morning, though. The recent high is 2474. Oh, Apple, and Pfizer. Take me to the promised land. SPY calls profits equals more AMC. Woo woo. There you go. STV got Liddy up in here. Yeah. Hey, we try. We're trying. We're doing our best. SPY new day high 468.98. There she goes. All right, there comes Apple. Let me see. Green on the day. Hey, that's what we need. Possible legal repercussions for unsubstantiated, unproven claims. Frank, sounds like you're a lawyer, buddy. I like that. We're going to, oh, new day high. Wait, no. Yeah, new day high, 2480. There we go. Yeah, we're going to need that breakout on Amy right here. Above 25, it could get spicy. Finally, only down 5K. There we go. Here we come, 470 on SPY. You know what? Let's get a little aggressive. All-time high. End of the year. What is it? 473.54. That's what we need out of SPY. If it does it, Amy's going to be having a great time. Same thing with Apple. If SPY starts to go on a moon mission, I mean, we've done decent trading the chop on the SPY, just that stupid volatility that we've seen. Oh, you got some AMD calls there, huh? Fade away. There you go. Guess what? I got a bunch of AMD shares at like 12. So who's really winning? What's AMD at right now? Did it break 150? No, not yet. AMD over 150 is fun. AMD below 150, slightly less fun. I can't wait till we can say that about AMC. Just be like, just get it back over 150. You know? Watch crypto with stocks bleeding so much lately. It would surprise me if they trade in. It wouldn't surprise me if they trade in sync together based on market conditions lately. All right, thank you, M. Kriegs. Oh, Apple day high, 179.22. I'm a fan. Geez, I'm already up 30% on these Apple contracts. That's wondrous right there. I love Apple. How many AMD do you have? Like shares? A bunch. I have a lot. Like a boatload. Like if they split and they run back to like their level that they're at right now, I won't ever work again. That's how many. All right. Apple doing good. SPY wants to come up here. So does Amy. Come on. Get it going. So a millionaire now? No. But if it split and then ran back up, then I'd be pretty close. Almost power half hour. Amy, come on. Oh, new day high, 24.85. It's slowly making its way back up to that $25 mark. We're very close to that same position that we were at yesterday. SPY might break 470. If SPY breaks 470, it's going to get a little nutty. That remember, we were looking for that 470 breakout. I think it was last week. Because maybe it was the beginning of this week when we were ripping. Sell them junk bonds and buy the dip. Yeah, no, I'm holding my AMD. STV, we should have had SPY calls. Ryan, I did say it in the trading chat. I was like, I don't know. I'm kind of feeling a SPY strangle right now. I was gonna go really small on it, but I was like, nah, not gonna do it. Well, what were we looking at? I think I was looking at the 466 calls. Those would be $3 in the money right now. So whatever. I mean, I'm getting it back on Apple right now, so I'm not mad. And Pfizer, sorta. But I don't know. Amy's looking like it wants to get above 25 too, which is going to be sweet. Here we go. What's up, Jorge? How you doing, my guy? You see the size of this cup and handle? Which one? This is just... Unless it's just this, like, whole thing and then a little handle right here and zzz. Zzz. Let's see. I'll trade you 10 AMC shares for your AMD shares. One-time offer. No, you can't have them. Sorry. All right, here we go. Come on, SPY. No. 470 breakout. None of this 469 bull crap that you're trying to do here. None of that. All right. Hope we all retire and stop working. Me too, my man. Was the Fed meeting good or bad? It was good. I mean, they are like, economy strong, but we're going to have to taper really quickly now to get to the rate hike sooner. They're literally, here's what they did. They essentially said that the economy is strong while putting out policy that would show us that they need to cool everything down, that things aren't going well. That's essentially what they've done. They're like, yeah, everything is good, but we have to do this wild stuff in order to make sure that it stays good. It's like, well, it's probably not that good then right now, right? Apple. All right, here we go. Interest rates will be rising. Yeah, in Q1, like at the end of Q1 when they finish the taper. Amy from market open until now? Yeah, sort of. I mean, we're going to need to see. I mean, same thing on SPY, kind of. And not really. SPY just went nuclear. Let's see. So, I mean, did Powell just end? Oh, no, he's still talking. Powell on, Powell off. 3 expected in 2023 and in 2022. So, I don't know. I mean, we don't know how the market's going to react to that money getting sucked out yet, which we're going to get there when we get there. I mean, if it's going to move to any big way, we'll be right there to trade it. So I'm not worried. Not worried one bit. Biden put a muzzle on Powell. Yeah. AMD, is it still ripping right now? Not really. I mean, yeah, it's up 6%. What's Apple doing? All right. Apple's selling off a little bit. I mean, the SPY's just selling off right now. That's just what we're looking at here. I mean, AMC still green, 8 cents of the green up about, or now it's 0.4. So not bad. If supply chain issues cleared up soon, that would be helpful. It really would. Need the SPY to keep going nuclear. Bought the SPY 500 calls for next week yesterday. Justin, what are you doing? Why would you do that? Why would you do such a thing? I mean, it could, like, I don't know. I mean, it could, technically it's possible. They're selling them to you. So not for me though. That trade, that's for you. That's not for me right there. Oh, Amy coming back up. AMC Ortex. Yeah, we can get a little Ortex update. Hold on. What are these? No. All right. 20.76% estimated. NASDAQ touches 2% as Powell speaks. Of course it does. Ooh, here comes the SPY. Here she comes. Dumb trade. Yeah, Justin, trying to pay for Christmas in one shot. Yeah, or you're going to not pay for Christmas at all. I don't know. I mean, it could. Let's see how much those are. Are they like the next Friday? I'm actually curious to see how expensive these are. I think it's this. No. Yes, it should be this. Maybe it's not, though. 2 cents. Great job, Justin. Great job. Maybe like a 480. You guys are still crazy. Like, why can't you just day trade 0 data expiration SPY contracts like a normal degenerate? Why? Why do you have to get fancy with it? Like, come on. 0.01 to 0.02 is double. It is, but there's not going to be a bid on it. That's the thing. Like, there will be no bid. Like, you might be able to steal it from somebody if you like put out an order and then somebody takes it from you like a market maker. But I don't know, Justin. If it hits, you can come make fun of me for the rest of my streaming career that you hit the SPY 500 call going into the end of the year in 2021, which is fine with me. You'd probably make so much money. But if not, I don't know. That's an interesting one. What is the next AMD? I don't know. I have a bunch of shares of AMD. I mean, I would say Apple, but I don't know. Or I mean, Qualcomm, NVIDIA, like those are going to rip. I mean, AMD, well, they're probably in NASDAQ, so that's why. Do you have custom settings on your VWAP? No, it's just normal VWAP. And these are, okay, so I did learn yesterday that there's like a VWAP that has multiple lines, which it's confusing for me. How can you have multiple volume weighted average prices? That's weird. Maybe it's different time frames. I don't know. I'll take a look at it. But these other lines are just moving averages. I would never do such a thing. You know what, Justin? I like you. Transparency. Watch the language, buddy. All right. Apple. Wrong way. SPY. Correct way. There we go. Stop talking to me. Oh, just kidding. You're allowed to talk to me. Powell, renomination has nothing to do with policy pivot. Interesting. Standard deviation, I guess. Yeah, you're trading like 3 standard deviations away. That's probably around what it is. 3 or 4 standard deviation. Here comes the SPY. Look at this. Looking for that 470 breakout again. Hey, SB, was the Fed meeting good for AMC and GME? I would say it was good for the overall market, which with what we've seen recently is going to be good for AMC and GME. I was worried about my 0 DTE getting liquidated, so I bought for Friday. What happens with these overnight? Could the market keep ripping and gap up? Oh, it easily could. And if it does, you're going to make let's say Wednesday. You'll make some money tomorrow, but if it keeps going into Friday, then you're going to really be happy. But with that amount of time to expiration on SPY, it's going to be it depends on what contract you bought, like, and how much SPY moves, but it depends. I like when it's 0 data expiration because you can trade them all the time. And if there's news and good technicals behind it, you can make a boatload of money. Like, I think you guys have seen me just randomly crush it on SPY. 471 end of day. See, it's coming back down, trying to do this 469 stuff. Like, what are we doing here, SPY? Come on. Nope. Up. All right. Amy at 2467, not doing too bad. Let's see. Not a hedge fund. SPY 4,500 for this Friday. YOLO. Okay. That one's for you then. You can have that one. I'll sell it to you if you want. I'll sell you, not a hedge fund, as many of them as you want. I'll sell you every single SPY 500 for this Friday if you want. I will literally bet against your trade. I will short your contracts. SPY 500 Friday, I'm rich. We'd all be rich, guys. I mean, AMC would rip. Like, these Apple contracts that I have would go nuclear. The Pfizer would rip. Like, DocuSign would probably get back to 200. Ryan would be having a great time. Like, if SPY hit 500 by Friday, we'd be really having a good time. Will it? Probably not. Powell off. Well, I don't want one of these SPYs. No, stop it. Stop. Don't mess around with these. You're going to lose your money. I'll tell you right now. If there's like one trade that you're probably going to lose your money on, it's SPY 500 for this week. All right, Amy. You're looking a bit spicy here, and I like it. How are these contracts doing? All right. They're good, I guess. I mean, chilling. S&P up 1.3, NASDAQ up 1.7 as Powell news conference ends. Okay, Powell off. Powell is officially off. So let's see what happens by the end of the day. I mean, with the Powell meeting over, the big buyers might step back in. So remember, that crypto liquidity dump that we could have been seeing over the last couple of, what is this? That over the last couple of weeks could be like, ooh, Amy, here we go. Could be to put more money back into the market. So here we go. Doc, you still running? There we go. Be all over SPY 500 puts if it gets near that. I mean, then you would just be buying at the money puts, and that's not even that fun. SPY 500 go. SB, please share the knowledge. What is the next AMD to get in early? I mean, in terms of like a percent, I don't know. I got in an AMD when it was like between 10 and 14. That was like the first stock I ever bought. And I was like, I like this one. This is a good one. And it turned out being really, really good. So I don't know. I also bought Penn at 14 and sold it at 30 and it went over 100. So like you got to just be able to, I don't know. If we're really thinking about it, it's probably some EV company. Or if they legalized smoky, then all of that would go nuclear. The next AMD is Squidcoin. No. AMD been flying for 4 years. Oh, I know. Okay. I did sell some because I was a little paper hand boy. But the big one, the big position that I have, nothing's been touched on that one, which is good. Can you explain what you trade when trading SPY options? I mean, it depends on the day, but it's been a lot of puts recently. I just look at the super trend. I use these moving averages like it's like a range that if it breaks above the range by like it's. So I use the hold on. Gonna have to take a pause from explaining the SPY trading strategy because Amy is looking for that $25 break. Okay, back to SPY. So I look at super trend, MACD, 200 EMA, and then these ranges I've got over here. And then news, that too. And if they all start to align, then I take a position. And then once I'm in the position, I'll use this 50 MA as like the guide. So like if it come like with what like this right here, look, so it'll come up, down, bounce off the 50, bounce off the 50, come up, bounce, bounce, and it'll just keep bouncing off the 50. If it crosses above or below the 50, oh, here we go. Then I start to watch it a little bit closer. If it then crosses above the 100, I'm out. Goodbye. Finally, a subscriber. Thanks for what you're doing. Thank you, man. I appreciate it. All right. Amy just crossed above 25. Here we go. Let's see if we can keep it. Come on. Here we go. We got 25 minutes left. Come on, Amy. Stay above that 25, and then we can really get going. We need this candle to open like the next one above 25 and then continue up, and that's going to be a good break. Come on. There she goes. She's looking like she wants to do it. Come on, Amy. Come on. She's holding. She's holding. I like it. Ho, ho, ho. There we go. Apple doing good here. All right. That was what we needed to see today, in my opinion, to be like, okay, we broke the trend. And with the Fed coming up, all right, people, blue skies ahead, in my opinion. I mean, let's see what happens at the end of the day. We still got a lot of time left. We need to hang above that $25 mark, and I'm going to be happy. If SPY can break out of 470, then boom, we're all going up. I mean, it's right around that 470 break right here. It just did it again. I mean, that's the second test that we saw. Amy having a great time. Hold on. I'm checking some stuff. All right. Amy, new day. So the day high right now is 25.18. I don't know. This is looking like those times when Amy can just get a giant boom, boom green candle. Also, TMI, where are you at, buddy? Get in here. We just broke 25. I don't know if you're lurking or you're listening right now, but I'm going to need you to hop in here and watch these boom, boom candles fire off with this SPY breakout. Apple coming up. Amy looking like it wants to get a new day high. Here we go. We're up 2.78% on the day. Come on. Thoughts on MKD? I need to look more into that one. I don't know. Bags getting less heavy. Yup. Yup, 100%. All right, Amy. SPY's back below 470, but Amy's still right around the highs. I think SPY's going to do it. I think she has it in her. Apple not getting that move either. Come on, Amy. Amy said, we're green today. Yup. Yup. Here we go. All right. Hedgy tiers have been refilled. Come on. There just needs to be that one big buy order that just goes boom and just hits it. Oh, there SPY goes. It's flickering right around there. They don't want it. I mean, is there crazy options for today at 470? Yeah, 89,000. I mean, if they have to hedge that, that is so expensive for SPY. That's 8.9 million shares-ish. I mean, it's a little less, but do 8.9 million times 470. Oh, that's a lot. Ooh, new day high. Come on, break. One big buy order. I got you. Not a hedge fund. Hey, man, I'm down. Where's Pico when we need him? I don't know. Where is Pico? Oh, I did ban him. That's where Pico is. Crush these clowns? Yup. That CV drinking a huge bucket of hedgy tears? Yup. Mm-hmm. Amy, Amy is doing great. She's feeling good. All right, Pfizer coming down. I don't know why. She's being a little hoe bag. SPY. Ooh, there it is. There's the break. There she is. All right, people. SPY's literally like $3 away from an all-time high. By the end of the year, calling it right now, we're going to see at least one more all-time high on the SPY. We've got what we needed from the Fed. We've cleared out all the bearish catalysts. Now it's time to go. It's time for the Santa rally. Here we go. I hope you guys are ready. I think it's going to get pretty interesting into the end. Yeah. All right. Here we go. This is going to be fun. I'm hoping these calls print, and now I become having a good time with those calls. Amy, what's up here? What you doing? What you doing here, buddy? No. We're staying above 25. I don't know who told you something different, but we are staying above 25. 25.12 right now, up 2.5%. How's GME doing? How's our little friend Jimmy doing over here? Oh, 151.21. That's pretty big. All right, Amy looking to test that support. Let's see how it comes in at 25. SPY. Oh, man. On the SPY. 470. It's going. She's going. I'm only down 50% down. Now I'm rolling in it. There we go. Santa Claus is coming to town. FOMO traders incoming. I mean, yeah, this is going to be a little gamma and short squeeze on the SPY too. That does happen, especially with the large wave of selling that we've seen. Amy is getting some sell candles here for SPY's coming back down to 470 also, but let's see what happens here. That's a pretty decent size. I mean, the volume on it right now is 279,000. This could be one of those silly fake red candles, and then AMC just goes rips right back up. So let's see what happens. I would love to see Amy close above 25 today. That would be sweet. Greetings from Germany. Here, everyone loves Amy and buy the dip till we mo. Ask greetings from Germany. There we go. Hedgies are going to bite the nuts. Being broke is transitory. I would have to agree. SPY wants another break. 2481 right now. I mean, they're coming out. Remember, we did have a lot of shares today and yesterday taken out on loan. 2085 on AMC. This is AMC, right? 20.85% on the short interest. What? Are you kidding me right now? Are you serious? That is nuts. That is nuts. All right, everything coming down a little bit here. I don't know. We got 19 minutes left in the market today. SPY looked for that break. The high's at 470.29. She showed that she could do it. She has the potential in her to do it. Let's do it, people. Yeah, also, if you guys don't mind, just dropping some likes on the stream just helps get some more people in here. I'm having so much fun right now watching this, even with these stupid little red candles. You know what this tells us? Time and time again, you cannot hold Amy down for long. You can have stupid bearish catalysts in the overall market that are going to cause a bunch of volatility, and the over-leveraged dummies at these institutions are going to be like, oh, they have debt. Oh, we think the movie theaters are going out of business. Short it then. Have fun. See what happens when we run back up in the danger zone, which we're going to talk about tonight, which is so much closer now. We don't know by how much, but by a lot, because of something that I'm going to show you. It's just like we could just run back to the levels that we were at before, and that level is danger for those shorts. So, Counselor Murray, thank you so much for the super. You should do Power Hour every day, Vix. You're like a sports commentator. Thank you. I do Power Hour every day now. I do 8:45 to like 11:45 or 12 in the morning, and then I come on at 2 and go until close. So if you want to come back and join, that's where I'm at all the time. Let's see here. Come on, Amy. Let's get a little pop going into close. Hoback. Yeah, exactly. Oh, I'm being very nice with the name. AMC Ortex record high yet? See, I think we've hit over 21 and we were getting to 22, but I don't remember specifically. It's hard to find the exact numbers that we were at on Ortex. Here she goes again. Oh yeah. Of course they're shorting it more. Look at the numbers, volume and price. Yeah, of course they are. Go for it. Have fun. It's not going to last for long. Well, there's Stonko tracker right now. I got it right here. You want to mess around for the December option? Fine, whatever. I don't care, because we have 107,000 contracts already in the money for January. And guess what happens after this week? Take a guess. Everybody that's going to YOLO on these crazy options, they can buy them closer to the money. So this open interest can be 30s, even sub 30, where it gets dangerous, and it creates an even bigger gamma ramp. Now, with what we've gotten from the Fed, everything can kind of get set free and they can let it go. They can let things ride because there's no like big bad scary catalyst in the market now, like the Fed taper, and they're going to raise rates sooner than everybody expects. I think we're ready to get going. Not like crazy. I mean, who knows how crazy this next one could be. But in general, the chop and volatility in the market is subsiding. SPY, what are you doing here? Falling below 469 now? What are you doing? Come on. 468.99? What's this? What's this? Love your show. Barney, thank you, man. I appreciate it. More Rocketful? Yup. Volume on Amy today, 49.5 million. All right, Apple, you're being an a-hole. Is 23 still a possibility? I mean, yeah. So the fuse is lit. Yeah. Right as the Fed comes out and puts everything within market expectations. I mean, yeah. Because the SPY can just like, what are they going to hold it back with? Like, seriously, what is the bearish catalyst now on the SPY? Inflation, already taken care of. Taper, asked and answered. Debt ceiling, already kicked. Government shutdown, they've already done it. Evergrande, already priced in. They've already done all of the bearish catalysts. Now we have 2 weeks until the start of the new year where we can let things ride. I am very bullish on the market going into the end of the year. AMC gamma squeezes every 6 months. It's usually every like 4 months. We saw it in September. We saw it in January. We saw it in June. It's been every 4 months. Highest short interest was September 28th at 20.84 on the estimate. Thank you. What are we at now? 20.85. All-time high on the short interest. Thank you very much. Because guess what? We know that some shorts will cover on the next run-up. Let's say it's a percentage. Let's say it's 5% of shorts cover on the big run-ups that we have. Okay, cool. All right, AMC looking like it finding support at right at those flat levels. But let's just say it's a percentage of shorts that cover when we have those giant run-ups. Cool. Okay, let's say it's 5%, but the short interest increased by 20%. So there's an extra 20 million. So you're going to get an extra 5% buying volume when it comes back in. So it means the price action can get even more aggressive the next time. And by aggressive, it's to the upside. We are going to Tokyo drift right into Christmas? That would see. I want to see him take a year and a day. What's that? Is it possible to create low volume orders by canceling out buy orders with sell orders? Not really. I don't really. Okay, nothing crazy coming in on the news feed right now. SPY is coming back down to its 50. If it uses it as support again, well, we got 13 minutes to rip into close. Remember, this is kind of how the SPY trading strategy goes. Look what it does. It rips above and then support, 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 rip. So let's see. Let's see what we get here. I'm ready for the next leg up. Me too, my man. Any chance hedgies are about to get burned both ways? Like you think non-ape retail traders that have no idea about AMC piled into short positions? Now they created more issues for hedgies. They could. Like I've seen people come into my live chat that are like, I'm short. And it's like, good for you, bro. Like good luck with that. Like have fun paying these cost of borrows and covering your short, adding to the buying volume. And I'm pretty sure we'll see you on the FOMO rally too when you figure out that we're right at the end. SPY and AMC almost look the same recently. That typically happens when you see lots of volatility in the market. Like if you're going to see big moves, it'll typically always follow. All right, so SPY is using that 50 as support right here. So let's see if we can get back above 470. I mean, we need a $1.50 move in 12 minutes. That's pretty big. I mean, this is a big sell-off, though, so let's see what happens. What's TLT? Ooh, hold on. Oh, here he is. Let's go. All right, got a special guest for everybody. I think this is going to be the catalyst that we need too. So make sure you guys drop some likes on the video for TMI, who is coming in right now. What's up, buddy?
Coming in hot. What's going on, man?
Oh, wait, hold on. I've muted you. Whoops. I had to go Powell on, Powell off for a while.
Did it work?
Yeah, it did. I mean, we ripped over 25, which was sweet.
I love it. Oh, man. AMC was looking freaking beautiful. I saw it coming down a little bit. I was like, all right, hold on a second. Let's see what we can do here. Let's see if we can go hop on to go check out the guy right now. Gang in the building. What's going on, people? Listen, I'm not gonna lie. Those freaking Mara calls today printed. The only thing is they are getting slapped right now. What happened just now?
I don't know. Oh, well, SPY's coming down to 50, the 50, using it as support. So like we've just seen it like ripped up, test, and then really ripped. But if it's fallen, it's doing decent right now. I mean, I want to see a 470 close. That's what I want to see out of SPY.
Okay, SPY. I had some SPY calls today. I should have went in heavier because those things printed as well.
Yeah, you would have been really, really upset right here, but then you would have like automatically gotten happy.
Yeah, I mean it was a long one, but I think I bought calls before I went on the stream today. So I bought calls on the way basically from 461. It came back down to 460.75, and I was like, oh, that's not what we wanted to see.
I was gonna strangle it like before too, and try to hit it both ways. Like I sent this in one of the Twitter chats. I was like, if right at 2, it's gonna come out and SPY is going to move, but the initial move is not real. Like the algos haven't had enough time to look at it, so you can hit everything. It both ways.
Exactly, everything hit down. If you could have got a bit of a dip put at that time and then cashed out and then let the calls rip, you would have made it both ways perfectly.
Oh yeah, I was gonna just set it up
fast
before and just let it go. If one side hits, sell it, and then just wait on the other side because it probably will come back.
Oh my god! Like
but I just got Apple and Pfizer calls instead.
Oh, that's perfect too. That's perfect. Yeah. Pfizer had a great day today. Yeah, Pfizer's looking really good. I mean, I should have got Mara calls shorter term. I bought Mara calls for March. And I could have got them so much sooner. I bought $75 calls for March. Because I was just like, this is just
what's it at? 40 something right now?
Yeah, but it was at 32. No, it bounced off 40, but it was at 32. It jumped. It had like a 30% swing. It was stupid.
Oh yeah, when I told you I bought those Mara calls when they were just tanking, I was like, yeah, I'm out. I don't like this.
I'm telling you, like, the only thing is this: Mara right now jumped as a 30% swing. If they get news that the subpoena is done and they have charges, they're gonna go on another 30%. I'm like, okay, I'm gonna get them now for March, and if I miss, I'll just wait for the update for the subpoena and I'll come back even again. You know what I mean?
Mm-hmm.
So that's like pending in the background.
Those will probably hit good. I'm hoping on these Apple calls. I mean, the where it's at now and where the strikes I have are way honestly better for like compared to the last Apple trade I hit. But SPY's looking like it wants to do the 470 break again.
I think Apple needs to be tested for steroids.
That's fine. I mean, if they fail, that's great. I mean, go for it.
Because there's no way that Apple is all natural moving the way it's moving right now. It's just
price target upgrade after price target upgrade. It's insane.
Oh my gosh, just ridiculous. I'm like, Apple, what are you doing?
Making me money.
Oh, slowly but surely. I've never played Apple calls as much as this month. I've never played Apple calls more in my life than I have played this month.
I know. I've literally only been hitting like crazy plays on Apple, and like every once in a while I'll hit a dirty SPY trade, but like it's been SPY and Apple recently.
Stupid. It's just stupid. I mean, we'll take it.
We will take it.
I'm very happy with the market bouncing back.
Right now. SPY's looking like it wants to do it. Apple coming up. Ooh. How are these doing?
Yeah. Okay. So
what
happened?
These are only up like 6%. That doesn't make any sense.
Oh, because the volatility dropped a lot just now. That's what I was saying when I was asking just now what happened.
Yeah, I think I'm
on options in general. Like, so once
who's here? Yeah.
Let me see here. I sold Mara too early and perfectly. I sold 25% of my call options when it got to around that $37 level. Big mistake because it got to $39.96.
Yeah,
I sold half of them then. I still have 25% of them. But when I started selling them, they were decreasing in value so quickly. It was just like that's what I was trying to figure out. I was like, what am I racing against here? It's not moving.
Exactly.
I think just the volatility just really died off. Like I think things were looking like it could went through the roof, and now they're just slowing down a little bit. But
yeah, I just got another one. Screw it.
There we go. That Fed talk, man, oh man, oh man.
Dude, that went exactly like because I was looking through this today. Like this was what I was looking at in the video last night and then this morning, and it was literally right. Where is it? $30 billion a month in total bond purchases. So that one, and then where are the rate hikes? It's right here. It's like it's the exact thing that the market was pricing in. It was perfect.
It's absolutely nuts. What do you think about this whole Adam Aaron update on this legal issue?
I think that if we squeeze before the doc is released, he'll do it. I think if it's after, if the doc is going to be done before the squeeze,
wait,
then
which
he's
so wait,
then he's going to
hold
have
on.
issues doing it. Like
Quickly, I'm talking about the legal issues with the competitors. What are you talking about?
Oh, you haven't seen Adam? Oh, so Adam Aaron was he was going to do the interview with Apes Together Strong, but he now is saying he can't because of scheduling issues.
Did he tweet it?
Apes to
did somebody tweet it?
So Apes Together Strong tweeted it, and then Trey commented under one of Adam Aaron's tweets.
Let me see here.
It's the one that's 3 hours ago. Come join me this Sunday, and that's the one that Trey replied to, and then there's the Apes Together Strong one.
Unfortunate news. Oh, 2 hours ago. Unfortunately, I was probably streaming when that happened. Okay. Let's see here.
Spy broke it.
So are people thinking that this is FUD or something? What's going on here?
I think they're saying that like he's not doing it. I think people are interpreting it in a way that it's like, oh, he doesn't want to do an ape interview. But I don't think that's it. I think it's him being like I don't want to. Because think about it. Like if you want it, because the whole documentary, the premise is about squeeze and market transparency. He can't really comment on a lot of that. Like he has made like the derivatives trading and the high frequency trading comments before. So that kind of points to him being able to do it. But I don't know. I mean, we're not directly involved in this situation. So like it's hard to make a comment about it.
I'm directly involved in the situation. So are you. You're the doc.
No. I'm not in the doc.
I had you guys on the interview, didn't I not?
Oh, I was on the interview.
Yeah, that's why I had you guys on. So we can all be part of the doc.
Oh.
You're part of the doc. Well, I mean, I don't know if we're gonna make the cut, but like,
yeah, no, that's what I'm saying. Unless we're,
I mean,
if that is used for the doc, then yes, I'm
well,
in the
because
doc. If that's not used in the doc, then I'm not in the doc.
No, that's what I'm saying. So they went to interview me for the doc, and I'm like, okay, if I'm gonna get on, everyone's gonna get on. So I didn't tell them. I surprised them. I was just like, okay, remember, I'm like, guys, hold on a second, heads up.
Oh, I do. Okay, I
and
do.
They just started
that.
popping people out. It was like 6 of us in the doc video.
Yeah. Okay, I do remember that.
Yeah, so I'm hoping that that's part of it. But yeah, so we'll see.
Okay, so back to the other thing that you were talking about.
Yeah. Okay, so the
Canada thing with the lawsuit with the other company.
So that is an issue that happened in Canada, but nonetheless, hitting a competitor in the States now, that is huge. $1 billion worth of cash.
I think what he's gonna do. People were saying he was gonna buy him out. He's not gonna buy him out because he's just basically paying to have more financial obligation. If they pay it off and they're struggling, he'll buy them. Maybe he'll acquire something, but he could expand into Canada or in their territories right now and take advantage of it.
So that's the thing. So he very well could. And if he does, that would be a huge. I'll talk about that later because I mean, like, it would be a huge thing there, right? But take this in. Let's say, I don't know, Adam Aaron were to potentially, hypothetically, allegedly show shorts which theater to short.
Think about this. They're public, right?
Think about this. If he's saying, hey guys, look,
it's a diversion.
He gives them a distraction. He gives them the bait. He goes, yo, don't short us. What if apes start shorting for the first time? What if we live long enough to become the villains that we despise?
No. Oh man, Rhode Island. Thank you so much for the super. I'm a Rhode Island boy, and I just want my attendees.
I'm a Rhode Island boy. It's hilarious.
That's so funny, Rhode Island. I like that one. Thank you for the super. And then not a hedge fund. Thank you, man. If AMC doesn't close above 25, it needs to close at 24.69 just for the hee factor. Okay, that's fair. We were getting there. We have a minute left right now. Is SPY above 470? It's about to hit 471. This is wildness. I already called it right now. At least one more all-time high on the SPY by the end of the year. Oh, I got to get some of those lights. That's what I got to do over break. Get a cool streaming setup.
Oh, yeah.
Apple popping a bit into close? Yeah, it is. Yeah, it is. Spy, get to 471. Do it. I know you want to. What's Amy at? Amy, 2468 right now. I mean, it's up 0.73. I mean, she wants to get there. Steven, thanks for the super. Cineplex is good. Cineworld is in trouble. Interesting. Over break, this dude a college student? Yeah, I'm a senior in college. 2465 close.
Cineplex is good. Cineworld is in trouble. Let's see. I'm an island boy, and I'm trying to make it.
Hold on. How did these Apple premiums need to get going? What is up with that?
That's what I'm telling you. I'm
But I bought
I'm
it
just telling
after
you.
the crush. What is
Yeah,
this?
the option chain just got messed up. Oh my
Come on
goodness.
Alexander, thanks for the super. Buy them out. Pennies on the dollar will allow them into bankruptcy or structures in a way that traps shorts by playing them down. I don't think it would matter. AMC would need to be bought in order for them to do some sort of audit.
Yeah. Oh yeah, definitely. And that just can't happen out of left field.
Guys, I've got a video and a half for you guys later.
Love it.
Oh,
love it,
TMI, did
love
you
it.
see that SEC news today?
About what? No.
Okay, hold on, let me pull it up. It's really good. Shoot, I'm gonna have to go so far deep into this because they did a Fed rampage, but let me see if I can find it. It has to do with swap reporting.
No, I did not see that
It's
one
really
yet.
good. Wait, well, 3 hours ago, 4 hours ago. Wait, what time is it? No, that's 12. It came out this morning. Right here. Wait, hold on. All right. SEC moves to force firms like Archegos to reveal swap positions.
Oh,
Ding, ding, ding.
that is
Bye-bye
going to be
shorts.
that is going to be very interesting. Oh, and Doctor, of course, what's his name's already on it. I'm waiting for him to have that interview with you know who from the chat.
Oh, yeah.
He said. Remember, he said he's going to interview him.
Yeah.
Hold on,
Yeah.
hold on.
We'll talk about it. Hold on. We got to talk about that. Oh, yeah. Oh, I do remember that. Yeah.
Yeah.
We got to talk about this other thing though.
Yeah. Oh, for sure. Okay. All right. So listen, I'm gonna jump off. I have to upload a video right now, but I'll catch you guys in a bit. Great freaking day, apes.
Very
Great
good day.
freaking day. All right, we'll chat in a bit.
All right, later. Whew. That was a day and a half. That was pretty sweet, people. Okay. Share that on Twitter, please. Yeah, I quote tweeted it earlier today. So you can go to my Twitter feed and it's right there. Guys, I think that's going to wrap up the stream for today. Thank you to everybody that came and listened to Jerome gaslight us for a while. It's fine. I'll take it if the market's going to go absolutely nuclear because of him. Fine with me. But yeah, Amy closed up 0.61, up 15 cents, down a little bit in the after hours. Screw it. We also have all-time high numbers on the short interest. Let's see if it updates here. 20.85% short interest. That's nuts. Thoughts on Anchorage Capital? That's going to be in the video later. We got some other stuff we got to talk about too. Anchorage, I knew they had a position. I was like, Anchorage sounds familiar. They got $4 million. I got to look at their put position, but I know they have some puts on AMC. That's going to be in the video. And we got some very interesting data that we have to go over that popped into my head today. I'm going to go record that now. If you guys don't mind, just dropping some likes on the stream on the way out. The video tonight is going to be out at 7:15 Eastern. So make sure you guys are ready. But yeah, awesome day. We got kind of clear skies ahead going into the end of the year, in my opinion, with the overall market. No more real bearish catalysts, no real bullish catalysts either. Got to be fair. So we could trade flat. But again, I mean, everything's looking pretty good, people. So thank you guys so much. I'll see you guys later.